Let's talk some commodities here. Scott Bauer joining me, the CEO of Prosper Trading Academy. Scott, let's start with the commodity and then talk some energy companies. WTI, a little bit of a slip today after a pretty solid run last week with the whole risk on action. So should we read into it a lot? Should we make anything of it?
Not really. It's probably some very necessary profit taking. I think, it was strong this morning, sold off going into the afternoon here. If you look at the top, Oliver, from about a week ago, I think it was on June 3rd, that is pretty much where we sold off to today, that high on June 3rd, which really should hold there for a little bit, as some support, some very near-term support here. So let's see what happens from this point. But to me, I wouldn't read too much into the tea leaves, and I would look at this more or less as, just some very necessary profit taking.
All right, so does that mean that we should extend the profit taking here to the profit taking and the areas that demand energy, the airlines and everything we've been talking about all day? I mean, is it time, Scott, for the folks who timed the bottom here, and all these different cyclical plays to take a victory lap?
So here's the deal, right? When you go against the marketplace, and this is just general psychology, right? You bet against the market and you double up, you triple up, or even people that just want to stay in, the market can always last longer than an investor can, right? So those of us, me included, that think that the market has really gotten ahead of itself here, and without much explanation, the market always wins, right? So yes, I do think that some of these stocks should be lower. I do think that the entertainment, the opening of the economy stocks have moved too much. But again, in an environment like this, sometimes rational thinking and you look at technicals and fundamentals, they don't mean a thing. And we're in one of those periods right now, which makes trading right now pretty difficult. Obviously, people have bought some upside and just kind of let them run, great. To me, I'd be super cautious of that right now.
Yeah. So, Scott, when you look at this, it's kind of weird that it seems we've got the supply side, okay, extension of cuts for crude, yep. And then the demand side from the other risk assets like stocks are saying the demand side is good. So if it continues and we see more weakness in crude, should we use it as a warning sign for other risk assets? Maybe not one day, but if it adds up.
Again, are we looking at long-term historical trends, right? Because normally, we see commodities like crude and the market, equity market, kind of go lockstep together. But that wasn't really the case just 3-4 weeks ago, 6 weeks ago, when we were seeing crude get hammered in the middle of this recovery. Now that we've seen crude really just come roaring back, almost, people like to use the term V-shaped recovery here, and we've kind of seen that with the marketplace. Maybe this is telling us something. Maybe this is getting back to a little bit more of that historical pattern that says, you know what? There's a warning sign here.
Yeah. All right. It's crude oil right now, $38.27. Any thoughts, Scott, on what kind of range we should expect now that we have seemingly solidly broken above the one we were flirting with a couple weeks ago, where we were kind of stuck between 30s, low 30s. Looks like we broke above it. Should we start to consider, the 40 area coming up? Should we start to consider return to normal, or will those days need really more conviction in the reopening of the economy?
I certainly think they need more conviction in the reopening. Listen, if things go really well, 2 weeks from now, 4 weeks from now, we see that phase 1 has become phase 2 and maybe even phase 3 in New York City. And here in Chicago, phase 3 has gone to phase 4. Yeah, all bets are off. We can go higher. But again, I think we've come too far, too fast. And I'd be really, really cautious of this reopening. Listen, the best thing that can happen is the reopening just goes splendidly across not just the country, but across the world. And demand just absolutely goes haywire, right? That would be phenomenal. I don't see that in the near future.
Yeah. All right, Mr. Bauer, one more here, okay? Should we be looking at this and thinking that we're in the clear? I mean, because there's the one argument that maybe we've gone too far, but what about the argument that it's all just like a figment of the Fed? I mean, if we don't get some big outlay by Jay Powell on Wednesday, does this all go away?
I don't think it goes away. But however, you make a great point. The Fed has absolutely rubber stamped that they are backstopping this market no matter what. Now, does that mean we just, grind higher or keep moving higher like we have been with, I'm looking up here, another 350 point day in the Dow, 30 point, 40 point rally in the S&Ps? To me, no. I think that at some point, some of the risk, type of things that are out there, whether it be the reopening or with China again, or whatever else it is, some of those have to come back to the forefront.
Yeah. All right, Scott, good conversation. Mr. Bauer, appreciate it. Scott's the CEO of Prosper Trading Academy. Thank you, sir.